This is our Forex blog for January 20th, 2012. And like most days, we want to buy the strongest ones versus the weak and sell the weakest ones versus the strong. The euro, until yesterday and the day before, was pretty much weak, and the weekly monthly trend were down. You can see today the monthly trend's still down, but the weekly trend was up, and it got a little bit less up at 4:30. It always pays to look at a longer time frame chart, and when you trade every day, you tend to realize that the euro, which was strong earlier last night, the day before, and so forth, for the previous few weeks was extremely weak. And so when you see weakness come back in the euro, even though the statistical weekly trend is still up because it's just starting a new downtrend, you'll know that. Now, one of the reasons why I always say look at the real-time momentum and focus mainly on this. If you see a lot of weakness followed by very little strength, that weakness is likely to continue down. If the daily trend is down and the weekly trend is down, it adds to that probability. But also knowing each currency and trading, a couple times a week or every day for a few weeks at a time lets you know that when you see some weakness in the euro, even though the weekly trend is still showing, strength, it can take, a day, day and a half, 2 days for the weekly trend to change because it's a weekly trend. The currencies can move hundreds of pips during the week. So 150 pip pullback is only half of what it moved up the previous week. And that's why it's a little bit slower in switching. This can change trend direction on any given bar. The daily trend, can take a few hours to change direction. The weekly trend can take day to day and a half to change direction. The monthly trend, could take a week, week and a half to change direction. So keep that in mind when you're using our tools. The Australian and the New Zealand have been strong over the last 2 weeks. And so when you see strength today coming into that, you know that that's a good one to be buying against one of the weak ones. Starting the day off, the yen is weak, the daily trend's down, the weekly trend's down, and you can see the counter trend move up late last night, kind of fizzled right here. When you see it go up with a lot of momentum and then it gets a little bit less and then you see the weakness, it's more likely to continue when the daily, weekly, and monthly trend are down. So the Australian yen, good one to be buying last night. Let's bring that chart up. Notice we have a narrow range pattern. Anytime, and one of the reasons I label that on the chart, you can put this on any time frame chart or class charts or 5 minutes, but I mainly use range charts when I'm trading myself. When the market has a narrow range pattern, this means that during this 4-hour or the previous 4-hour period, it moved less than it did during the previous four-hour period, so about 16 hours. And the bar was inside the previous bar. An NR4 inside bar means that the high is less than the previous bar's high and the low is greater than the previous 4-hour bar's low. And so you have a very low volatility pattern. Typically, if the longer term trend is up and the price is above the hourly moving average in the middle, you only want to use this to buy breakouts. But it tends to show up right before big trends most of the time. So the fact that this came down and found support at the hourly right here, the fact that it had a narrow range pattern, pretty high probability trade when it breaks out. It goes sideways here for an hour and a half. The currency meter showed that the yen was one of the weaker ones, and the Australian has consistently been one of the stronger ones. If you look back over the last couple of days, look at some of these big moves up. Extremely strong currency. So when you buy the breakout right here, you can see it went from 30 all the way up to about 60. Nice little 30 pip move, and if you use our intelligent trailing stop, it got you out somewhere around here at 44. You're in this trade at 24, you made 20 pips. And a lot of times when currencies break from above to below the hourly, they have nice sized trends to the downside. It's less likely to happen when the weekly and monthly trend are down. So if you had decided to sell here, when it came down, it had one 5-minute bar of incredible weakness, and then the weakness fell off a cliff. The market went sideways again right here, and when it finally broke over that range, this is another good place to go long, and you can see it broke out right up to my Fibonacci profit target levels. I spend 30 to 40 minutes every night predicting using Fibonacci retracements, Fibonacci profit targets, where I think each currency's likely high or low is. Fibonacci retracement levels can show up in the middle of the range, but normally the dark gray Fib profit target levels tend to be the high or low. So these are excellent places to get out of the trade. Notice it went up, pulled back, went up again with half the strength that it had before. pretty decent place to do a counter trend trade. Double tops are oftentimes the high, and when you see a double top with, you know, half or even less, this would have been even better than this. Very likely to reverse. A nice little 30 pip counter trend trade. So a lot of good trades today. This one, nice move up. You might have decided to short here because the Australian dollar's been up quite a few days, you know, and it's possibly due for a reversal. So I might have taken that trade, but once it goes 10 pips, you move your stop to break even. That would have been a break even trade, breakout trade right here. And I like to see at least a 15, 25 pip pullback. There wasn't enough of a pullback to buy there, but when it double topped with less strength and at my fib levels, which I trust because I've been drawing fibs for the last 11 years, you can see a nice little 30 pip counter trend trade there. Be careful doing counter trend trades in one of the strongest currencies though. So, you know, when this, if I would have shorted this up here at 80, when it went down here and went sideways, I would have got out of about half at 65 and then used the trailing stop on the other half. Don't get greedy when you're doing counter trend in some of the strongest pairs. Now the yen was only weak during this period here. Another currency that was quite strong at that time was the euro. And the weekly trend was up in the euro as well. And at the time, it was actually stronger than the Australian. So coming up to midnight today, the euro yen makes a good one to be looking to be buying. Now this one didn't really have much of a pullback, and it's up near our upper containment band. So it doesn't have as much room to really run as a currency that was strong and it pulled back to the hourly. If it pulls back to the hourly, usually if the trend's going to continue, it will go up to the upper white 2.0 band. So if you had bought it like right here, for instance, if it had given you that nice chance like the Australian yen did, 64 is your entry. It might have a profit target at 08, and you have a good chance of making 40 pips on your trade. By seeing this one at the beginning of the day, you know, at 98, it might go up to 07. That's only 10 pips away. If it breaks above the previous day's high, which is the dotted green line right here, my next Fibonacci area is up here, which again, you saw it. I predicted the high in the Australian yen and also the euro yen using Fibonacci analysis. 33 is very likely the maximum high of the day, and so if you had bought this somewhere around here, you have, you know, maybe a 30% chance of making 30 pips on this trade. But what I like to consider, which is even better than the breakout right here, is once a currency breaks above the previous day's high and comes down and does a retest, this is a pretty high probability trade right here. It didn't, in this case, pan out. It went up maybe 6 or 7 pips. I always keep a very, very tight stop. Anytime you buy or sell near a support resistance area, you can put your stop a few pips underneath it. So you're risking a tiny, tiny amount here. And when it starts to go up, I always move my stop to break even, and I would have got out of this at a break even trade. Notice the statistical strength is to the upside. The pullback right here is 1/3 the weakness of the previous strength. The daily trend's up, the weekly trend's up. Unfortunately, the monthly trend is still down. And so I would have went long again right here, and this is my profit target. The second trade worked. It went up about 25 pips. So you can see if you got in here, you might have made about 10 pips, 10, 15 pips. You got in right here, you would have lost no more than 5 or 6 pips or broke even, and the third trade made 25 pips. And because this has a monthly trend that's down, and because it's my Fibonacci area, and because it's above the 2.0 containment band, and because it's more than likely at the Fibonacci 1.618 of this previous swing right here, very good place to do a counter trend trade. Now, typically I don't get into counter trend trades until they kind of go sideways up here and then break down. I would have gone short right here at 23, and usually the previous day's high is a potential profit target, and it stalled there for about 10 minutes. I would have got out of half my trade here at 05. That would have been about an 18 pip profit. And then here's the next profit target level, which is a weekly pivot and the hourly moving average. Usually this is an area where it finds some support and it can bounce at that point. So I would have got out of half again right here, and the other half when it hit the hourly and went sideways. So my average exit probably would have been around 95 for about a 29 pip profit. But you get short and you put your stop a pip or two above the high. So in this case, short at 22, stop is at 33 plus the spread. I'd have a 15 pip risk, which, you know, that's what your initial risk is. As soon as the currencies start to go your way, and for me it's 5 to 6, 7 pips, I move my stop in half. So now I don't have a 15 pip stop, I only have an 8 pip stop. And as soon as it goes down a little bit more, I'm moving my stop to break even. When it stalls here, I'm out of half. And typically, when I'm out of half, I move my stop down. I don't like to give back more than half of my profit. So if I'm up, let's say 10 or 15 pips, I'll move my stop up 5 pips or 7.5, 8 pips, just so I can lock in 5 to 8 pips on the second half of the trade if it doesn't continue. If it continues, then hey, I'm happy about that. But sometimes it does, sometimes it doesn't. You never know what's going to happen in currency markets. Now you can see it pulled back here, and the hourly or the statistical strength got less and less, or I should say the weakness did. So a lot of times when currencies pull back to the hourly, they find support. This is a pretty decent place to go long. Your stop's underneath here, and this is another reason why I move my stop up. It goes up about 6 or 7 pips. I move my stop up a little bit, and so it comes down and stops you out. You have a very tiny 6-7 pip loss. And usually when currencies hit the hourly and they don't bounce and the trend doesn't continue, usually it's going to go the other way. So if you're very nimble, it's very hard psychologically to believe the market's going to go up, buy it, lose money, and then flip and go the other way. But it is a method that, you know, as you trade for a number of years and you keep accurate journals and notes each day, you'll realize that most of the time you'll get your loss back on the next trade. So you can go short right here, draw your fibs off this previous swing. This is an excellent place for a profit target. You're short somewhere around 84. You're out, let's just say you got out of the whole thing at 63. You made 20 pips. You got your 6-7 pip loss back plus another 14 pips. And, you know, that's a beautiful way of trading. I would have got out of half here, and then it came down really close to the previous month's low and the next fib level. I would have probably got out of the second half somewhere around 59. So my average exit would have been around 61. Just another way of using our charts to trade.